we can keep talking. It's so important, and it doesn't happen all the time. So you should share that with them, that we're
I'll tell
of that as well, because they've made it super easy. So yeah, thanks everybody for joining us this afternoon. We'll get started here in about 30 seconds or so. Yeah, so it's always delightful for us when we see that happen, because the team really, what they want to do for all of our members, whether they're partner members or lender members, is get them the things that they need. And that is usually a sign for us that things are going well and they're gaining information and they're enjoying themselves. And so we appreciate that. All right, I think we will go ahead. We have some people still joining, but I think we will go ahead and get started. Good afternoon, everyone. This is Faith Howard Mooney, SVP of Member Engagement at the Mortgage Collaborative. And I am joined today by someone I have not known for a long time, but has been so instrumental, I would say, in the industry. And I wanted to know you long before you were a member of here. I also have hair envy. I have to share with you guys that every time I see Christy, number one, she's a beautiful woman inside and out, but she also has the most beautiful hair that I'm very jealous of. So Christy Soukhamneut, CMB, CMPS, and Chief Lending Officer of University Federal Credit Union. And we have somebody skipping another meeting.
I saw that. Like, that's cool.
Thanks, Femi.
So the goal in life now, Faith, is to make this more interesting than a compliance meeting. And so we have the bar is set.
Yeah. So you want to give like a little debrief of everybody? University Federal Credit Union has been in our network less than 6 months. Seems longer than that. We have a very engaged team of people with us. Do you want to share with everybody kind of what you're all about and what you're doing over there?
So Faith, one, thank you for having me, and thank you for the kind words. It has been a pleasure getting to know you and the other members of the Mortgage Collaborative that I didn't know. And it's really exciting as we see just the desire for our team to really want to learn and grow. We're in what I think is an overused word. We're in a challenging market. This has been the most volatile market of my career, and having been in the business for over 30 years, we've seen some significant ups and downs. But this is unlike really anything we've ever seen, both the speed, the pace, the technology, just the market volatility. You know, there's a lot. And if any of us have seen challenging markets, in a lot of cases, it was earlier in our career where we weren't in charge of making decisions. And so you don't have a single person in leadership today that maybe was in leadership in the 80s when we were in a rising rate environment, right? Most of us that have been in the business have really only seen declining interest rate environments. And maybe there's a little jump up and down or whatever, but it's not been, the prolonged thing. So it's a lot of really, really interesting things that we get to see along the way. And our team has really jumped into all the tools that the Mortgage Collaborative offers, in the roundtables and the opportunities to talk to your peers on specific topics and really openly talk about, challenges and just brainstorm, right? There's nothing that can replace, there is no ChatGPT program that can replace just the ingenuity and the camaraderie that you get around these shared experiences. And so that's putting those things together and their education. So really excited for what you guys are offering and putting out there.
Oh, I so appreciate that. And it's been really seamless with your team. So if we can replicate that many times over, we think about like how much impact does that have to the industry and down the road for the new people in the industry. So that's always our goal. Always our goal here. It's always nice when it happens really easily, which like I had shared with you before we even started the call, like it has with your team. So let's get started and talk about some things that have been going on in the industry in the last week or so. One of the things that I kind of wanted to get your perspective on is everybody talks about the boomers and how boomers aren't moving out of their houses and the reasons why behind that. One of the articles I ran to, it was entitled "Homeless or Overhoused." Boomers are stuck at both ends of the housing spectrum. And there were some things in this article that I just thought were kind of super interesting related to the percentages. And so 35% of the large homes in the United States are owned by boomers. Probably not surprising, or it wouldn't have been surprising 5 years ago. I think surprising now, maybe that statistic is still at that spot. Everybody's always shared, people are aging in place, smaller home would cost more. So people are not wanting to move. Um, I would just love to hear how you feel about that, because the opposite side of that, and what was interesting in this article to me, is 30% of the adult homeless population is over 55 years old. So you have this part of the population that is in the large houses, and you have this other part of that population of people that is homeless. And so I would just love your opinions on that, and kind of what you've seen actual, on the ground streets, and if you're seeing some of those same things.
Well, let's talk about my parents, right? There's nothing like a little anecdote to really live into this. And so my parents do own one of those larger homes, the home that I moved into my senior year of high school, but I'm the oldest of three. So my younger sisters, really kind of had a much longer opportunity to live in what my parents would consider our family home. And it's a very large, home. It was designed for three kids and specifically three girls. Moving for my parents is a little different than maybe some others because their house was owned free and clear. And we know that a large number of people have not only considerable equity in their homes, but they may own them free and clear. And so you say, well, they're not locked in by that, by the 3% golden handcuff interest rates. So why don't they move? One, I look at my parents and the amazing friendships they have in their neighborhood and in their community. And giving that up is hard. So even if you don't have that interest rate holding you captive, you may have that community feeling. Also, how many of the kids come home for Christmas? How many, what are the lifestyle changes that have to occur? Also, taxes. And I think this is an important point that we talk about in some ways, but we don't. If you've lived in a house for a long time, many states have homestead exemptions. And that homestead exemption rises with you as the value of the property goes up. And so even if you're downsizing and it's a similarly priced home, so from a financial standpoint, it's not that big a difference in what you're having to pay for it or what your mortgage would be, et cetera, you still have an increase in taxes. And for many seniors, as you overlay data that says, what do they have saved for retirement? What is their Social Security cover? And this article goes into that at the other end of the spectrum, where you talk about the homeless and Social Security hasn't kept up with rent. And so folks who are right on the borderline end up homeless. But if you have to change properties and, let's just say you sell a house for $300,000 and then you go buy another one for 300,000, your taxes on that first one might have been $100,000. And so now you've tripled your property taxes. And that could be a big burden for folks. And so they're choosing to stay in these larger homes. Now, my parents chose to move and they put their house on the market. So hopefully, or will be putting it on the market. So hopefully somebody's going to come along and buy it. And that's going to be great for a new family. And, they're having an opportunity. They chose to live closer to their grandchildren who are still, some of them are still small. So what does that mean? Do we think a lot of seniors are going to put their houses on the market? Are they going to die? I don't see that happening. I see a much slower pace. You're also seeing that at all age ranges. And another one of the articles you talked about that we were talking about before is this homeownership survey from Penny Mac. And one of the things that they shared that I thought was a really interesting statistic that kind of ties into this is how long people feel that they're going to live in their home. And it's increased, right? It used to be when I bought my first house, the average person, lived in their home around 4 years or so. And now we're talking that, hey, they plan on living there 9+ years. That's a long time. And so there's the pace of change for moving is different than it used to be. We're seeing it extend out, and you're seeing that across all age generations.
Yeah. I think that that was probably out of that article was one of the most interesting things for me because I remember 3 years, every 3 years. And maybe that's, tempered a little bit by I was in the relocation industry. So you saw people on a cycle that they moved every 3 years if they were in a certain spot. But what I thought was further interesting about that is it makes me wonder. So I have a 32-year-old, and their expectations of what that first house is are very different than what like her dad and I's expectation of a first house was. And it made me wonder, it's like, is that expectation for them different because of the fact that they plan to stay there a lot longer than what we ever thought we would stay in the first house that we bought? Now, kind of ironically, her dad is still in that house that was purchased in 1991. He's still there. And that was never the plan. The plan was to move up. And I feel like new people coming into a home now, they have different expectations of amenities and what the house is and how big the house is, based on what I experience in my family with their friends, and people like that. But it makes me wonder, it's like, well, are they pre-planning further ahead? Are they planning for the house that in 9 years, maybe they're going to have kids and maybe they're going to have 2 dogs. Maybe it's just not going to be the two of them in that house. So I also thought that 9 years, that seems like a long time to me.
It does, and so many life changes can occur. But when I started growing, getting my first house and growing up, if you will, adulting for the first time, there was this expectation that with jobs, you moved and you relocated. And so if your career was going to take off, either you or your spouse, like there were going to be a number of relocations throughout that period that held true for the first half, I would say, of my marriage, that we had to do a number of moves. Then we had the opportunity because, just through different things, I didn't have to be in a single location. He didn't have to be in a single location. So it let us pick, but we were on the road traveling a lot to different locales. Today, you see that hybrid work or remote work opportunities that didn't exist before. So I think the time horizon has changed a little bit. You aren't having to sacrifice your career to by not moving. You can stay in a community and you can build those roots.
Yeah. Yeah, I agree with that completely. The whole remote environment and many jobs that were never historically considered to be able to be done remotely. I mean, mortgage is a classic example of that. It was, said for years and years and years, you needed to be in the office, and it's been proven that you don't have to be all the time. I think it's still preferred for a lot of people.
You help a lot by not being there. I don't want to say that you shouldn't be in the office and that you shouldn't have remote opportunities, but there is something to making sure that you have mentorship and that you have the opportunity to learn from just the day-to-day interactions. And so never being in the office to me is not the ideal situation to grow your career, but we do have different working opportunities today than we had when I first started my career.
Yeah, so true. One of the other things that I thought was very interesting about this article is 70% of the people that responded to PennyMac's survey noted that they did not feel societal pressure at all for buying a house. And I think that's a little bit of a shift too, that it was always considered like part of the becoming an adult, right? Or adulting is that you're doing this and other people expected that of you. And it seems like there's been a change in thought process there as well.
I think it's great that they didn't feel that pressure to do it, because my assumption in reading the article was they bought a home, but they didn't feel like they had to. So they felt like they were making, like, I'm going to read into this because the article didn't say that, but what I read into it, my positive intentions here is that they were able to make that decision based on their finances and what was best for them. And they didn't have to worry about the pressure over here of this is what you're expected to do. And so they felt like they were making better decisions. And I think that's really good. What worried me about some of these statistics were where it said 55% of female home buyers said their biggest challenge was finding a home in their price range, while 51% of male home buyers said it was saving for the down payment. And does that play into, the level of income that people have, the areas that they live in? Are there home expectations? Was that part of the problem? I don't know what the answer is because it didn't get that deep, but it really does start to bring up the affordability issue and the income issue that we have in many, many cities across the country.
The income issue, and then from a woman's perspective, finding something in their price range, and from a male's perspective, saving for the down payment. I thought it was interesting in that men historically still make more than women in like positions, but yet the men were concerned about having the down payment. And the women were concerned about it being, in a certain price range. I just thought that was a very, very interesting dynamic to come out of this. The 65% of the single home buyers purchased their first home in the range of up to $250,000. And
Where you find a house for $250,000 because I just
exactly.
moved and I don't think I saw a single house that was $250,000.
Yeah, that was my question. It's like, where do you find that? Because even, Minnesota is Midwestern, and I feel like people always assume Midwestern, you're not coastal. Things are, more, you can find more value. There's nowhere.
Oh, so I don't know if you guys are still here with me or if when Faith left, we lost everyone. Oh, she's coming back. This is excellent. I don't know where Faith went. Now we can't hear her. You're on mute, Faith.
That now I'm not. I'm so sorry. I should explain to everybody on the call today. I hope we don't experience that again. But I am in Columbus, Ohio with the entire TMC team. We've had a day of strategy for all of our members, our partner members and our lender members, talking about all the good things that we want to be able to do with you and for you in the next year. So I'm in this I feel like I'm in a closet kind of here outside of our meeting space. So I apologize. Hopefully you will not lose me again. But what
Keep
what
talking.
we were talking about.
Keep talking.
But finding a home for $250,000 anywhere in the United States right now, I think would be hard to find unless maybe you're in more of a rural or more of an outward from a city environment, I would say, in a smaller community. Those are the only places here where you would ever be able to find a home. And I think you would still be kind of almost hard pressed to find it there, to be perfectly honest with you. So I thought that was kind of interesting as well.
It also brings up, and this wasn't one of the articles that you shared, but I read it a couple of weeks ago, just some data from the National Association of Realtors that talks about one of the things that kind of turns home buyers off is they're having to pay this extra money for homes, right? Home prices and values have gone up. Though interestingly, Lawrence Yan shared yesterday in a post on LinkedIn that if you look at the last 45 years or so, that house prices have only gone up about 5.3% a year. Inflation and other things have gone up around 4%. So it's not crazy when you look at the overall cost, but home buyers today, according to NAR, really, they feel like they're pressured. They're having to pay a greater percentage of their income than they had just a couple of years ago. And so their expectations of what the home looks like in terms of being remodeled is much higher. And what we all know from nobody wants to do the work. The seller doesn't want to do it. The buyer doesn't want to do it. Everybody wants it to be move-in ready. but really we haven't seen the type of appreciation historically overall that would occur. Now, what I thought was interesting about Lawrence Yun's post was that he said, look, if by 2085, another 45 years from now, if house prices continue to move at 5%, the average home is going to cost $1.9 million.
Oh,
Yeah, so that seems like a lot. So and his point was this is good, good for generational wealth. So if you look at the overall, you can't predict any one year and you can't even predict out obviously that long, but finding that home, even if you have to stretch a bit, was what I read into his post is, hey, stretch a little bit because historically this is going to be good. And it's going to be good in terms of, like we were talking about earlier, as you age in place, if your taxes are low because you bought the house a number of years ago, it's going to mean an easier retirement. It's going to mean you can better fund your kids' college. It's going to mean you have a home to pass on to them that has equity in it. And so when we think about just the opportunity that we have as lenders, we are creating that generational wealth and educating folks that come in who rightfully are a little worried about the percentage of their income they're having to spend and what does that mean for current budgeting. How do we help them understand the true cost of homeownership and the true benefits? I think our job really is to do that and to continue to share that information. So kudos to the folks that are on the call today and who I know get out there and do a lot of reading, who understand this and can pass this knowledge along to consumers in this particular marketplace.
I think that, I mean, obviously, I mean, people talk about groceries all the time and how expensive they are. We've been talking a lot about how much taxes have went up in certain places, but then you add in the fact of insurance in place of have added up. It just seems like the amount of disposable income that you have after that is really like shrunk. And I understand I moved a year ago in February unexpectedly. And I totally understand that personally, that you feel like, okay, was this the right decision? And I tell myself every single day, I love where I live. Of course it was. Of course it was the right decision. I moved into the right place for me, even though it was a stretch for where I was at and what I was feeling like I should be doing at this stage in my life. But it still was the best decision that I've, I've made um, because it was good for my family and it's been good for me as well. And I think everybody has those hesitancies, especially when you're stretching. Um, but if you've got all of the facts, I think one of the best things that we can do for people in our industry is to spend the time educating them on when you move into a home, these are the additional things that you want to make sure you plan for, right? So that they don't have that bad feeling after they get in and realize some of those additional expenses that always seem to crop up somewhere.
Faith, every time I've moved into a new house, I've worried that I can't make the mortgage payment. And this is what I do for a living, right? I can calculate it. I can look at my budget. I'm like, yep, I really know psychologically that I can do it. But your mind starts to play games on you and you're worried about it. And so until you write at old school here, until you write those first couple of mortgage payment checks and everything is all right, you can still buy groceries, there's some concern. So that, that piece hasn't changed from when I started in this business to today. Homeowners, prospective homeowners, our clients, the people that we have the joy of helping, they still go through that emotional roller coaster as they're moving and as they're packing up everything in their lives, right? Like that's a big deal and a big effort. And our job is to walk alongside them. And what a privilege.
That is so true. That is so true. I think everybody has stress related to that. You're making a big decision. You're moving all of your things that have been important to you. It impacts your family. I think that it's a great thing for us to remind ourselves of as we go through the daily business that not everybody does it every day like we do to make them feel comfortable, educated, and understand that they're making a good decision. I think is always a great way to help people and serve people as well.
I do think when people are
Um,
educated, it leads to higher levels of customer satisfaction which leads to, we'll get into this, I think the next article, it leads into fewer consumer complaints. And we've seen those complaints go up when people feel stretched financially and they have stress. There is this expectation psychologically that everything else works better, does different. And when you have that stress, you're more likely to complain. And we're seeing that in the numbers from consumer complaints to the CFPB.
I know. Wasn't that shocking? I mean, for me, not having really done any research in that area before and understood what they were, I thought those numbers were quite high. I would love to have more detail behind what were the actual complaints. But the total number of consumer complaints submitted to the CFPB was at a historic high in the first quarter of 2024. 487,784 complaints submitted during the first. I thought that was high for the amount of volume that is being generated in the industry right now. And so I don't know, I would just love for you to share, like when you read the article, what was your gut reaction? Did that seem high to you, or was that, oh yeah, people, in the environment that we're in, maybe have more opportunity to have dissatisfaction? I would just love to hear your comments related to that.
I don't know if it's that, but I certainly think that, from a consumer expectation level, some have very realistic expectations and others don't. And they're, if they haven't done a mortgage in a few years, or their expectation was that it was going to cost less. I mean, we've seen you look at the data from MBA, and they talk about the increases that we've seen in the cost to produce a loan. Well, all of that ultimately gets passed on to the consumer in some form or at some point or form. And so they're seeing an increased cost to purchase a home. And I think in a lot of cases, that's shocking. They're also seeing the number of calls that they get from when they get their credit report pulled. Like that number is exponential. Like I've heard horror stories of people whose ex-spouses got called because they pulled credit to refinance or get a home equity line of credit. Or just, one consumer who shared they had 69 calls in 2 days over, having their applying for a mortgage, and there's this belief among consumers in many cases that we have sold their data, which doesn't feel good to them. Now, that's not true. We all know that's not true. If we could stop it, we would. If there was a magic button we could click, but it's not enough for the consumer to opt out of that the day before we pull it. It takes time. And so I think there's an education process there too. I also think we're seeing some increased complaints because consumers are having higher taxes and insurance when they go for renewal. And so they're passing that along, this frustration that they have over what's happening to their mortgage payment when maybe their income hasn't gone up as much as their taxes and insurance. And anecdotally, certainly hearing a number of, our members say, well, what does the county need all that extra money for? Like they have a budget. Why do we need to pay extra? Why aren't they doing more to relieve what's going on from an individual's perspective? Because why do they need to increase the revenues as much as they are?
In speaking of credit, a lot of it was credit related. And of course, much of it could be because we've heard stories from within our lenders that people getting 200 and some phone calls, elderly people being called over and over and over again. Some of those things. I also wondered whether some of it was related to the cost associated with, you're paying more. And when you pay more for things, I think there's naturally this expectation that if I'm going to be paying more than what I've paid historically, what am I getting that's more? Am I getting something additional for that additional cost? And with the cost of credit having gone up, whatever percentage it is, I'm not going to state one because I know I would be wrong. But whatever that percentage is that it's having gone up, if people have been through the process, I mean, say it was 5 years ago, they would be experiencing a significant increase in what that looks like. And that may be their expectation, but I think the expectation also is then you get more. Am I wrong in thinking that people would think that?
More expect to get more, but you go to the grocery store and you might be paying the same and you're getting less, right?
Yeah,
That they
a
call that
smaller box,
shrinkflation, and you're
right?
seeing that happening. So is that what's, is that what consumers are feeling when they deal with us? And how I go back to this piece about education. How are we doing at educating them? And we may be doing a really good job of sharing the information, but it's not landing, or it's not hitting them at the time that's right. Because part of learning and really education overall is not only do you have to have good information, but it has to hit you in a way that you can absorb it, and it has to be meaningful and impactful. So we might share with consumers what's going to happen with their data and the credit bureaus that sell it, and they're going to get all these calls, and we can tell them that information, but then 3 hours later they've gone on to something else and they don't remember that. All of a sudden they're getting all these calls.
They don't remember that. I mean, we have found, which I think is true of almost everybody. A lot of times when you hear something for the first time, you really don't absorb it, right? You're getting so much information at you that you're going to absorb it at different levels, different things. So you may need to hear it 2 or 3 or 4 times before the impact of that really sets into you. So you haven't heard it 2 or 3 or 4 times. um, it may be in the back of your brain, but it's definitely not something that you've thought through enough to understand this is how it's going to impact me. You may know it's coming, but you haven't sat and thought with it long enough, I think, a lot of the time, to be able to, gain that information or that insight. So we don't ever want to, like, I feel like people err on the side of, I know I told them this, I don't want to insult them by telling them it again. And I think sometimes people need to hear things more than once.
They also might be hearing information that's not true in other places. Unlike in the past where there was a gatekeeper to information and you could tend to believe a lot of the things that you saw. Today, anybody with, a cell phone can create a TikTok or an Instagram account and share information. And they're sharing, I'm going to subscribe to them the best intent. They're sharing information based on what they believe, but it may not actually be true. Maybe it was their experience of something, but they don't have the deep knowledge. And they're sharing these things, and our borrowers are hearing this. And so we're having to not only combat, just educating them overall and helping them through the process, we may have to be combating disinformation that they learned in a 60-second TikTok where they only shared one thing and not all the nuances. And you're starting to really see that. I get frustrated myself when I watch some of these things that people send me, or I see them. I don't have a TikTok, but I have an Instagram, and I see some of these things, and you're like, well, that's not right. Nope, that's not how it works. Nope, that's not what the law says. Like, you just really want to get people to be a little more focused on the truth. And I hold anybody who has a TikTok account to a very high standard of actually researching and sharing the truth, because that's what we should be doing. And I know that everybody subscribes to that belief personally. I just wish they would.
Absolutely. Absolutely. That's so true. The sources of information are more plentiful out there and they come from different sources than what they have in the past. And sometimes they're vetted and sometimes they aren't.
But
So I totally believe that. We are out of time.
this flew by.
It always does. It always does. I so appreciate you. You can come back anytime you absolutely want. This has been such a delightful conversation today. We love tapping into your expertise, and just the great conversation and thought process that you bring to all topics that we interact with you on. So appreciate you and your team for engaging with us. We are here to help you, and please come back and do this with me again. I would love that.
Thank you, Faith. I appreciate it. And I hope we lived up to skipping a meeting and being more engaging than compliance.
I'm sure we did. Thanks so much, everyone, for joining us today. Come back next Tuesday at the same time, and we will be seeing you from MBA Secondary. I will have National Mortgage News with me next week. So appreciate you all. Let us know how we can help you.
Bye,
Thanks,
everybody.
Christy.